Greetings to all. This is Neel Parekh, a technical research associate at GEPL Capital. Welcome you to this weekly market outlook video. In this video, we are going to talk about the Nifty and Bank Nifty current chart structure, and as well as we discuss the two stocks which has the high potential to outperform the broader indices in the upcoming sessions. So, without any further ado, let's start with the video. Yeah, so this is a Nifty 50 weekly time frame chart. So in this chart, we are observing that the recent part after the breakout, which has been witnessed on 21st March 2025 peak, has been showcasing an resistance at a level of 23,800. On account of that week after the breakout candle, after second week, the weekly session has witnessed a shooting star pattern on the weekly scale. As a result, shooting star is an bearish candlestick pattern that denotes at a higher level selling pressure has been emerged and has got due to the exhaustion of the trend. So due to that, it has witnessed a strong selling pressure on this week and it made an shooting star pattern. And on the current week, which is being showcasing the red bearish candlestick on the weekly scale, that closed below its prior week low, which is a shooting star candle low, that confirms the bearishness on the weekly scale. So if we look at broadly trend of the weekly scale after witnessing a breakout of its sloping trend line, which has been connected from tops, the index has witnessed an exhaustion sign at the elevated level of 23,800. So at 23,800 seems to be an trend reversal level from neutral to positive. And at a lower scale now, Nifty has been nearing to its key support level of 22,800. The current close or current week closing is around 22,900 level. It's been a 100-point difference that 22,800 is an important support level. Sustainability below that for the two consecutive days, it will showcase and continuation on the lower side momentum towards the level of 22,500 and 21,800 level as well at a lower scale. If you look at the support importance of 21,800 level, the 21,800 level coincides with the demand zone which has been drawn on the rectangular pattern. That further confirms the momentum could be renewed from this level of 21,800. As of now, bearish structure they have been observed on the weekly scale. Zooming on to the daily scale consistently forming and lower highs formation for the 6 consecutive days now. That denotes the weakness on the trend, your daily trend, as well as the daily scale has closed to under today's Friday session. Daily candle has closed below its 20-day exponential moving average, which is a short-term average that defines the caution for the near-term basis as 20-day exponential moving average as an importance for the short-term period. So short-term trader could witness a caution at this point of view. Even the RSI momentum indicator is been witnessing a bearish crossover at an higher levels, and it's been currently hovering near to 44, 45 level. That further defines the loss of the higher side momentum. So Nifty view remains weak as of now. At a lower scale, breakdown below 22,800 could witness the fresh selling pressure toward 22,500 to 22,000 and furthermore towards 21,800 level. Now, if we look at the Bank Nifty has been showcasing a countering view. The weekly scale of the Bank Nifty defines the picture. The weekly scale has been sustaining the higher levels of 51,000 level. And if we look at it's been also sustaining the key averages of 20 and 50 week exponential moving average. And if we look at the daily scale of the week Bank Nifty chart, the Bank Nifty is been consolidating in the broad range of 51,800 to 50,500 zone, 50,750 zone. So Bank Nifty seems to be showcasing a strong resilience compared to the Nifty index, as well as Bank Nifty sustains above 20-day exponential moving average. So positive trend remains for intact for the Bank Nifty. Till then, Bank Nifty sustains above 50,500. The trend would be positive for the Bank Nifty. Below 50,500, Bank Nifty could drop towards 49,000 level and furthermore towards 48 to 50 level as well. And the breakout of 52,000 could witness a fresh long for the Bank Nifty that the momentum could propel towards Bank Nifty propel towards 53,000 level and 53,300 level as well at higher levels. Even the RSI indicator, momentum indicator, is sustaining a daily RSI indicator sustaining around 60 mark. So sustained momentum has been indicating both price action as well as the momentum indicator. So Bank Nifty view remains positive and Nifty has been negative as of now. On the sectoral front, Nifty Auto comes to the negative territory, maintaining low top, low bottom formation across the scale. Even the weekly scale, it's been showcasing a bearish crossover of 20 and 50 week exponential moving average. So trend remains negative for auto sector. So auto sector seems to be an avoidable sector for the buying as of now, as it lost its momentum. On the buying front, we can focus on Nifty Financial Services and Nifty Private Bank. The Private Bank Index has also witnessed a strong momentum as the Private Bank Index is a part of Bank Nifty. On that, HDFC Bank, ICICI Bank, Axis Bank has been showcasing a strong resilience compared to the broader indices and witnessing an outperformance. So private bank index has witnessed a double bottom formation reversal, and as well as it's been sustaining the level of 20 and 50 exponential moving average. And on the daily scale as well, it's forming an flat and pole pattern and sustaining about 20-day exponential moving average. So these two sector, first is auto, should be an avoidable sector for buying side. We should look for the short opportunities on auto sector, and in the private bank sector, we can focus on the buying opportunities. Now, stock to watch for the bullish momentum for the days. First is HDFC Bank. So as discussed, private bank sector is showcasing a strong price action. So from there, HDFC Bank seems to be an good opportunity at current level. The weekly scale of HDFC Bank remains positive as higher bottoms formation is intacted, as well as it has been sustaining above its key breakout level of 17,166 level, which is an inside bar pattern breakout on the weekly scale, as well as it sustains above its key averages of 20 and 50 week exponential moving average. So trend remains positive for the HDFC Bank. Current market price is around 1860. We can set a target at 1860 and 1880 for the HDFC Bank at higher levels, with a stop loss to maintain at 1780 mark. Second stock to watch out is for the buying side is Max Healthcare. Interestingly, the Max Healthcare on the monthly scale, it's been showcasing and rising trend despite the broader market correction of for the 5 to 6 months. The stock remains resilient on the monthly scale. If you jump to the weekly scale of Max Healthcare, it's been forming an high top, high bottom formation and sustainability above key short-term average of 20 and 50 week exponential moving average defines the bullish undertone as of now. An interesting observation is on the RSI front. The RSI, which is a momentum indicator on the weekly scale, has never crossed below 46 mark since July 2022. That defines the strong resilience on the bullish structural story. And on the daily scale, it has witnessed a pole and flag pattern breakout on the daily scale. And it's been showcasing a buying interest from its 38.20 Fibonacci retracement level as well. Current market prices is around 1,133 mark. We can set a target at 1,175 and 1,230 level at higher levels. with a stop loss to maintain at 1017. That's it from my side. Hope you like the video. Do share and subscribe to GEPL Capital's YouTube channel, and we'll meet the next week. Thank you.